Hi everybody, this is our Sentiment Timing weekly video recap for Tuesday, February 17th. Again, sorry I couldn't get this out last week. Things were pretty busy. And let's get started. As a trader, ask yourself, who would you rather follow for trading advice or market direction? Would it be somebody who is right 70% of the time, which is about the average, but sticks with their market direction calls even when something has changed? Option A. Option B, somebody who's right 70% of the time, but changes their view when something has changed. Option B. Or option C, somebody who's right 90% of the time, but changes their view when something has changes immediately. Obviously, your answer should be C in this, and the reason why I'm asking you that question is because tonight's video is going to be on being wrong but changing your view very fast. And the reason why I'm doing this is because our most recent market call direction, we were looking for a top to hit on February 6th in that area, which it did, but we weren't looking for a low to hit until February 23rd. And I'm going to go through the newsletters and how things changed and how we changed before really any trouble hit. So February 3rd, this is the newsletter that was put out, and we are looking for a top to hit somewhere near the 3rd into the 6th with a low coming due on February 23rd. So that was that newsletter. Now, on February 6th, which is the Friday, we sent out the email alert saying that's when the market started breaking down, and that if you were waiting for some type of short, here's the spot using the 1229 as your stop. So that was sent on the 6th there. So everything was working out perfect because the S&P did top on the 6th and actually ended up dropping pretty significantly. But what happened was Monday we continued lower, and then we got some Greek news, and futures spiked up, and everything changed. And this was when what we put out on February 10th, or the next newsletter after that, after the February 6th email alert. And what it was that, you know, we published that an alert to try and short after the strength on the 6th. It worked out, but there was no noticeable downside traction, bigger and better trades, maybe both ways. But the thing is that we were looking for the February 23rd to be a kind of a hard landing, meaning we were going to go down hard. Then it turned into a soft pattern, and that was basically because of the strength that we saw in the morning after the Greek news. So our whole roadmap changed, and we picked up on this on February 10th that something has changed. And really what Woody had said was on a scale of 1 to 10 as far as being what would be the size of your position on the short side. It would be 0 to 1 and saying the markets look really Greek. On the 11th, we reiterated that yesterday's strength was not in the ideal playbook, but as always is telling. Recent relative strength may identify the 2-2, or the February 2nd 90% bullish as a decent low. So going back, expect it on the 3rd, the 6th to be a top with the low to the 23rd. The 6th was this short alert. Then on the 10th, we started changing because things changed. 11th reiterated. And if we go through just a regular chart of the S&P, February 3rd was when we were saying we were looking for some kind of top on the 6th. 6th came. We had a nice drop. Once we got this big rally off of the Greek news, this was our February 10th newsletter. So you really, even though we were right on the initial top and then figured out we were wrong, you didn't lose any money. So we changed. We didn't hold to, okay, the markets are heading down into the 23rd as they were heading up. We changed, and nobody lost money, even though our initial roadmap was wrong, and then February 11th it was reiterated that the strength is here and no need to go over. We've rallied some 40 points above the levels that we put out the warning that the short side isn't going to work. So again, we were wrong with our initial call, and not every one of the calls are going to be correct, but the fact that we picked up on it before anybody was losing money is the important part, and that's really what you want as far as a leader to help you through market direction. And it was pretty impressive how Woody changed his mind that quick and went right into, you don't want to stay short. And we all want to be in the big trades, but these big moves don't happen every week. They don't even happen every month. And as a trader, you have to be patient and almost think of it as a Texas Hold'em poker game. And I don't like to compare investing or swing trading to poker, but the thing is this, is that if you're in a Texas Hold'em game and you go in all in on every hand, you're not going to have any money left for when the good hand actually comes. And that's the same with the markets. If you turn around and start making big bets when it's in a high risk, low reward environment, you're not going to have any money left when the big turns come. So this is the just the S&P, and this is what's been going on since December. And if you took this breakout trade in December, which was December 22nd, you just became even on February 12th. All of this time, it's just been churning up and down. So it's been a very, very choppy market, and nothing was sticking. And that's what we mean by yes, we all want to be in these moves, and we've predicted them before they've happened. But the thing is that they're not always going to come. And if you don't pick up on where things have changed before you get in trouble, this is what happens. So that's what I mean by when we're in a high risk, low reward environment, you have to lower your trades. So yes, the big moves, they've come in August 18th. Woody predicted that, or 19th. Woody predicted the top was coming on 9/18. The S&P dropped 200 points. In the 9/23 newsletter, the bottom was coming on October 15th. S&P rallied 240 points. These were the last two really easy moves. They were predicted. Everything else has just been a sloppy trading environment. So it doesn't make a difference how good you are. Unless you are very, very fast, you weren't going to make any money in this until this breakout. So that's really what we wanted to go over in tonight's video, is that we're not going to be right all the time, but we're going to let you know when things are safe to, say, trade larger or not. And there's a reason why Woody's been predicting the market reversals for over 35 years, and it's because he's the best. And again, not every one of these terms are going to be correct, but he's going to let you know when something has changed beforehand. He's not going to stick with, the low's coming on the 23rd. We scrap that very quick once things have changed. So if you want to take a look at the regular sentiment right now, you can see we have a series of 90, 92, and 97% bullish. But sentiment has to be interpreted, and nobody does it better than Woody Dorsey. So yes, things are thrifty right here. Doesn't mean we can't go higher. Well, that's what he goes over in today's report that we just updated. So we have the $99 rate special for the first 20 subscribers. It took us 3 days to fill that last week. You also get that the Q's special report that Woody did today. If they're filled, you can always do the 1 week free trial. Just hit on the subscribe button. But whether you whatever, say, subscription you take, do you really want to navigate through these markets without one of the best market timers leading you through this? So, it's amazing how accurate he is, but there's times he's going to be wrong, and this was one of them. But nobody lost money even with him being long. So with that, hopefully you guys enjoyed our update, and we will talk to you next week.